always start off with is what's going on in the market. So I'm going to start off with opening up the home page of the VectorVest software, looking at our home page. Going into 2020, and you're going to hear a lot of this going on for the rest of the year. This is the year for good vision, right? 2020, you've already heard that. Hindsight is always 2020, or 2020 is perfect vision. I think that our goal for this year is to set you guys vision on being better investors in the market. And these Trending Thursdays are going to play a role in that, but everything that we do in VectorVest is already leaning towards that way to always make you a better investor. But I think just because the year 2020, we need to put more emphasis on you guys having better vision in this upcoming year to help you to make money. And the more you do that, the better off you're going to be as well. So just keep that in mind. But it's, I want to make this social media platform grow as big as it can, and that's going to come from you guys. Why'd you do that? Wow. All right. So keeping on board with that, let's get into what's going on in the market. First off, we can see that all of the major indices are up today. All right, the Dow, the NASDAQ, the S&P 5 and 100, and our VectorVest composite, all up today. The market is up. The Dow is up 181 points. Good up day in the market. Market is still hitting historically new highs coming off in 2019. Looks like going into 2020, we are still on pace to keep rising higher. But always remember, just like the Blood, Sweat, and Tears song, what goes up must come down. It's absolutely right. So all I'm saying is it's great to take advantage of what's going on in the market, but don't lose sight of the reality that at some point in time the market's going to come down. And let's move over to our color guard. And from the color guard, you have a heads-up indicator called the MTI, the Market Timing Indicator. This indicator is cast on a scale between 0 and 2. But when this indicator gets to the range of about 1.5 to 1.6 on that 0 to 2 scale, the market is at a point where it's looking toppy. Now, how do you know when a market tops? Well, you know when a market tops when it stops going up and it starts going down. This heads-up indicator, only found in the VectorVest software, at least let you know that we are at a level where the market is looking toppy. We're going to take a look at a market timing graph in a second. But as you look at this information, our color guard is our traffic light into the market. We track 3 indicators on this color guard. Price, which is the price movement of the VectorVest composite. The VectorVest composite is an indexed arithmetic average of all of the stocks that we track, and currently we track 8,268 stocks. So the price of the composite, or the VVC, tracks the movement of almost 8,300 stocks. RT is another indicator tracked in the color guard. RT is one of our core proprietary indicators, also cast on that scale between 0 and 2. RT looks at the short-term price trend of the market. This indicator lets me know if the market is in an uptrend or not. It currently is above the value of 1, so not only is the market hitting new highs, going out of 2019 into 2020, but it's a good uptrend in the market. That's a good thing. The BSR, or buy-to-sell ratio. If you look, every stock in our database gets a buy, a sell, or a hold recommendation every day. The BSR, or buy-to-sell ratio, looks at the relationship of buy recommendations divided by sells. We can clearly see that we have 2,150 buy recommendations in the software and only 917 sell recommendations in the software. This right here is telling me that the market is showing signs of strength. More buy recommendations in the software means more stocks are moving higher, getting buy recommendations in the current rally. That is an indicator of strength or weakness in the market. And we look at these indicators on both the week-over-week and day-over-day basis to assign colors to these tiles. There's 18 boxes here looking at the last 6 trading days. Currently, we have 3, 5, 6, 7, 8 green, which means that I've got 8 green. Oh, if I got 8 greens, that means I got 8. Oh, that's wrong. 3, 6, 7, 8, 9, 10. So I've got 10 yellows. I said that. It's 18. Now, why? If I got 8, that means duh. I don't know why you didn't figure that out, Joey. Wow. All right, means I have more. You have to take your calculator out.
Waiting for it to load up.
It was 10, we got 10 yellow lights and 8 green lights. The market is saying, going along with this MTI at that level of 1.5, the market right now is saying, just be careful. Don't be afraid to take advantage of the up days as they happen, right? Don't be afraid to take advantage of the up days as they happen. But with more yellow lights than green lights, this is a time to just be careful. Don't be afraid to take some profits off the table as well. We are at a level where the market is starting to look for a top. Just be careful. Tighten stops. Don't be afraid to do that as well. All right, so as we look at these indicators, let's go over to the market timing graph real quick. There it is. Let's go look at the market timing graph. Did I put on the wrong one?
Yeah, 1 second.
Joey messed it up. No, it's not supposed to be. It's supposed to be on the other side. I'm going to drink out of my Mission Cup today. Even though they lost the Citrus Bowl. Horrible. There we go. Joey got it fixed. Can they see the right thing now?
Yeah.
All right.
I just wanted to fix it up before we
Well, thank you. You should have let me know what was going on instead of just clandestinely. My Michigan cup, not my Duke cup. There's my Duke cup. All right, but today I'm drinking the coffee out of my Michigan cup. Go blue. Go blue. There you go. What you know about Go Blue? You don't know nothing about Michigan. All right, so here's the VectorVest composite on the market timing graph, now shown in candles over the last year. Let's go move this into a 3-month graph. And remember I talked to you about that MTI? Here's that MTI now shown on the graph. Notice that when the MTI, let's go put this back on a 6-month graph, put it on a 1-year graph. Notice that when the MTI gets to that level of about 1.5 to 1.6, let me go find you a line here, 1.5. There we go. Let's make that a little darker so that you can see it. And this is that information. This is that good heads up. How about when the market gets to that level, market's moving up, there's that MTI above that value of 1.5. What did the market do? Pull back. Again, still above that level. What did the market do? Pull back. Still above that level. What did the market do? And a little bit less of a pullback. But I also want to show you something else. All right, I'm going to draw a freehand line. I want you to see something. See as the market is going up here? Okay, if I draw connecting the lows, the market's in an uptrend. I want to show you something. What was the MTI doing? That indicator that tells you the underlying trend of the market. Let me draw this line a little darker. This is stuff that you look for having the VectorVest software. Look at that upward move in the market where the MTI is falling. Look at that. This is what I mean by, as a VectorVest subscriber, things like this should never blindside you. Things like this should never blindside you. All right? Right now, we're at the level where the market is looking for a top again. All right? This is why I say, if nothing else, folks, just be careful. Tighten stops on the stocks that you own. Let me put this on a 3-month graph. Market's still in an uptrend. Gotta love that. We got a little bit of indecision going on today with the market at that level of looking for a top. A little bit of sideways move as well. This is a time we saw on that home page, a time to just be careful. That information that you get on the home page is outstanding, bar none, worth every penny that you would pay for the VectorVest software. That by itself. But I can see the yellow lights popping up, more yellow lights than green, telling me to be careful. The VectorVest composite by way of the candlesticks are telling me the market's moving a little bit sideways. All of that backs up together. So now it's not that you hear me saying it. The software is pointing you to the direction of just be careful right now. Don't be afraid to take advantage of an update. Don't be afraid to take advantage of stocks that are going up, but do it cautiously. Does everybody in the room understand? Can I have my chat back, please? Does everybody in the room understand that? If you do, please type a yes in the room, because this is important stuff. This is the information that you need to make the right decisions, but I want to make sure that everybody in the room gets an understanding of what's going on. Please do type. There you go. Please type it, because this is where the rubber meets the road. This is where you make the decision to either make money or you get caught out and you lose money. So a lot of the yeses are coming through. That's exactly what I'm looking for. All right. So given all of that, let's talk about why the market is doing what it's doing. Let's go to our first story today. I didn't set my stories up right, but that's all right. That's all Joey's fault. Let's go start. Let me go find my first story. My first story is going to be about what's making the market look the way that it is. All right? What's making the market look the way that it is? There's two things that are moving the market right now. What are the two things that are moving the market? We talk about it every Trending Thursday. Interest rates and the deal with China. Interest rates and the deal with China. As long as interest rates stay low, people are happy. But the lower the interest rates, it's good for the economy. It's good for the economy until we get to a point where inflation becomes an issue. Once inflation becomes an issue, because prices start to rise, then we start to raise the interest rates. And when we do that, we start to stymie a bull economy or a bull economy. Right now, we're still in a bullish economy. And the tariffs between us and China could hurt the market. So my first story is how tariffs hurt us, a new report from the Fed. So in looking at that, Fed economists are out with a new empirical study measuring the impacts of the 2018 tariffs. An industry's exposure to tariffs was associated with lower employment and higher producer prices. They found no statistically significant relationship to domestic industrial output, and this study only measures the short-term effects of tariffs and only 2018 tranches. Interesting as you look at what the tariffs are or are not doing for us. Well, if we build goods or we raise taxes on goods coming into us from China, that hurts our ability or hurts their ability to do business with us and vice versa. So it can stymie either economy or both economies at the same time. And I like that. Job says what's moving the market now is PR, public relations. Partly yes, but I'm still going to stick to, in case you didn't know, there's three things that move markets globally: earnings, interest, and inflation. Those are the three things that move markets no matter what area of the world you are. So globally, those are the three things that move markets. Earnings is the good guys. We still had historically good earnings on stocks for all 4 quarters of last year. All right. Well, we're not going to know about fourth quarter for 2019 until the next earnings. Well, we're getting ready to pop off into new earnings shortly. All right. Earnings are going to be coming out. So we're going to be talking about earnings for the last quarter, quarter 4 of 2019. But earnings still have been beating. Estimates have been beating, and that's good for a bull market. Interest and inflation are the bad guys, though. The Goldilocks scenario is to have rising earnings but falling interest and falling inflation. Right now, interest is still at historically lows. In inflation, even though the Fed says that it's still in check, we can still see that right now prices are starting to rise. It is, but the Fed still says that right now it's well within the range of what they're looking to accomplish. And until inflation gets to be a bad thing and prices really start to get exorbitantly high, we're going to keep interest rates hopefully at where they are. I think that they right now have stopped considering lowering interest rates because we still have a great economy. There's no reason to raise interest rates. There's no reason to even lower them anymore, in my humble opinion. In my humble opinion, I don't think we need to anymore. But there's been talk about lowering all the way down to zero or even going to negative interest rates. And I never thought that within my time on this planet that I would ever hear any person ever say that we should get to a point of negative interest rates. All right, so there we go. Everyone, please remember to hit the like button. Oh, that's right. Look at that. Tom is in there in the back doing some stuff. Thank you, Saborium. Saborium says, welcome back. I appreciate that. I read on Yahoo this morning that the market is news-driven today due to China doing something to help their economy. And I do know, Robert, that phase 1 of the tariff deal with China is about to happen really soon. I think that the president is planning a trip to go to Beijing so that they can sign phase 1 of the agreement, and we'll see how that works out. All right, so looking at that story about how tariffs are affecting the market, along with, well, jobless claims. Jobless claims dipped to 222 to the end of 2019, back near half-century lows. People are working, folks. That's great for the economy. All right, that's great for the economy. And unemployment is at historically low lows. And that's great for the economy. So you look at those two things, talking about the tariffs and how that could affect the market or the economy adversely. And the other side of it, jobs are doing, if people are working, that's really good for the economy. So now let's go back to my graph that looks at the market timing graph. We'll do that. And we're going to look at another graph. Something else that you guys probably look at would be the spiders. I'm going to do it a different way than I planned. But look at that. Even the spiders, the S&P 500, right along, put this on a 3-month graph. The VectorVest composite is moving up nicely. Look at that. The S&P 500 moving up nicely, hitting new highs today. Going back to the VectorVest composite, we're coming off historical new highs from about 3 days ago. So overall, the market is looking bullish, folks. So there's no ifs, ands, or buts about it. The Chinese are under the illusion they have the upper hand on Trump. Paul, two things I won't talk about is religion and politics. I know that it's hard not to talk about politics, but and even if they feel that they have the upper hand or don't have the upper hand, you know what's important? The results. Do we get the tariffs pulled away? Because that's going to hurt us and them. That's the overall goal. So, Paul, as long as whatever is happening, if the tariffs get off the table, that's going to help us and it's going to help them, and everybody will be it'll be like, we all, what is it? We all live in the yellow submarine. The yellow, it's something like that. Or we can all hold hands as a global economy and go, Kumbaya, my Lord. We can all hold hands around a big campfire, a big global campfire, and sing. All right, that's what it's all about. We want the relations to be a good thing. Paul is right. We are the world. We are the children. We are the ones who make a brighter day, so let's start living. All right, but everything right now from a market standpoint, whether it's our VectorVest composite or hold on, Henry, that's a good, and hold off on that because that's a good question. Should energy be the next up? We'll talk about that. We will definitely talk about that. All right, so from a market perspective, that's what's going on. Unemployment's nice and low. The tariffs could be coming off the table. The Fed is still right now considering just leaving the interest rates where they are. If all of these things can stay in place the way they are, I think we're going to start off 2020 with a good bang. But just keep in mind, looking at that MTI, looking at the VectorVest composite, which tracks over 8,200 stocks, just be careful. Don't get blindsided by all of the news. All right, don't get blindsided. A lot more up days than down days. Definitely, I can see, and this is over the last 3 months. We are retracing off a high. All I'm telling you is don't get cocky. All right, don't get cocky and don't be afraid to tighten stops on stocks. Today is a day of indecision. We got a little bit of doji forming on today's activity. So the market is at that level of the high. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.